Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Thursday. It is the 15th of August. By our normal standards today, pretty uneventful day in the market. Stocks moving back and forth a little bit, but not really going anywhere, at least from a broad perspective, closing pretty flat, doji style over on the S&P 500. Welcome out, everybody. Hope everyone had a great day trading. Hey, Ryan, good to see you, buddy. Always great to have you around. Hope golfing season is treating you right. It's always golfing season for golfers, I think. So welcome out, my friend. And hope everybody had a great day trading. It was pretty uneventful, from a broad perspective, just kind of a day off, it felt. We were seeing some things pop. You saw Cisco really get beat up post earnings as guidance really disappointing there. And a nice pop over on Walmart. GE and the words whistleblower and fraud were thrown around. Big down day for GE. I know Coach Tim is out traveling, but I know wherever he is, he's smiling right now. It does, Ryan. It does feel like a mellow Friday. That's a good way to put it. Welcome out, Jimbo. Great to see you, sir. Hello, Patricia. Hello, Linda. As always, you guys, thank you so much for joining me. Always fun to go through this process with you. It just was one of those days. We kind of drifted a little bit back and forth. Looked like maybe towards the middle of the trading day, maybe we're going to see some selling, but then abruptly changed our mind, kind of rallying up, closing near the top of the trading range here today on the S&P 500. Not a lot to see here. One thing that we can do, and I think we have to kind of stay on a shorter term time frame to actually see it, is we've now tested this support zone. Whoops, there we go. Yep, too tight of a range trying to draw a line there. There we go. Pretty crooked, but I think we get it. We have tested a little bit of a support level here on the intraday. I'm going to be looking at below that support as kind of that next still signal to the downside. If we see downward momentum, upward momentum, I think we have a lot of work to do before we can get too terribly bullish. First challenge would be our pivot back here on this 15-minute time frame, at least in my opinion, going to put us right around 2880 approximately. If we can push through that, I would expect to try to work into that trend line. That's going to put us right around 2900 that we looked at yesterday. So there could be a retracement, a little bit of a rally. Broadly speaking, I don't think that's something I'm interested in whatsoever. Individually speaking, there could be companies, we looked at Match, we looked at Level 3 Harris. There were some interesting movers here today, at least by today's standards. Same real story as yesterday. This 28 zone, is very important. So even if we kind of take out that little intraday support level, we've just got the weekly 50, the 200-day moving average, the big round number. So I really think the bullish battle line is at that 2800. If that gives out, and I guess it'll be one of those. I hate to do those, but you know it when you see it types, right? I don't exactly know what number I would call it. I will expect, if it does fail, to work back down to our pivot down here at that 27, 20, 25 range on the S&P 500. Just not quite there yet from a bullish point of view. Breaking of support, there's quite a bit in that zone, and I will respect that. Right or wrong, I think it is worth respecting. Over in Dow, very similar type of a day. We've already kind of broken down another breakdown on the intraday, hitting a recent low here yet again today, rallying up off of that. So we did see a little bit of rally as we saw in the S&P to kind of close the day out. Was it legit? Was it real buyers? Was it short covers? And I don't know. It's not enough to make me think it's legitimate, but if we can start breaking some resistance on the intraday, I could see a case for the aggressive bulls. I think the more conservative traders are going to need a little bit more than breaking 15-minute resistance personally. I know I will, but if we find ourselves kind of swinging to the upside, even if it's a bearish retracement, there are bullish opportunities out there, right? It's just kind of flip it around from what we have been used to throughout much of the year, whereas there's been bearish opportunities, even though most of the year the market has been in an upward swing. Over in the NASDAQ, very, very similar. We do have NVIDIA and Applied Materials both reporting earnings here tonight, so that's going to be an interesting one. John Deere in the morning, by the way, before I forget, only real huge names set to report here either tonight or tomorrow, but certainly, NVIDIA, Applied Materials might have something to do with the semis, might have something to do with the NASDAQ. Off of the lows, so we did see some buyers off of the lows, and that's really kind of the key takeaway. Any moving forward, more selling, purely signal from the index perspective, probably going to need to be taking out today's lows, from that kind of first, okay, there's some more bearish momentum to the downside. That's at least how I think we'll be looking at it going into tomorrow, at least. The rut is, of course, the interesting one. We are knocking on the door of that support. Now, we did hold today. It was certainly our weakest index, relatively speaking. We are kind of hanging right at that 1460 level of support. We've seen a bounce, we've seen a bounce, we've seen a bounce, we've seen a break. I think we respect this. I really do. I expect that there's a good chance that it holds, especially if no news comes out, but that's asking a lot on the no news front these days, right? If that does give out, though, I think we really have to respect the fact that there's just not a lot of support. We do have a ton in this 1450 to 60 range, and I'm calling it a 1450 to 60 range, but as you can see here, we've got a lot of history in that ballpark. If that gives out, however, I'm not seeing the same thing. I expect I think a realistic expectation of breaking support is testing the weekly 200 average. I think that's where my head will be. That's going to put us down closer to 14. So I would expect if we do take out that support level, there's probably 50 points on the rut that at least when I look, I can't see any support level. I could understand if someone's buying off the 200 weekly or even the support level we're at today. I'm not that trader, of course, but I'd get it if someone bought here, said, hey, this is held, let's bet on support. That's always a respectable bet as far as I'm concerned. So if from a condor perspective or from a directional perspective, I'm thinking if we do take out this support, 1400 is the most likely outcome. Should be an interesting battle at that point. Obviously, from a selfish perspective, and I'm sure many of you probably agree, let's hold, right? So generally speaking, I don't mind what the market's doing. I have my favorites just like everybody else does, but I wouldn't mind the rut holding and staying within this range for our condors. So that's where we find ourselves, broadly speaking. On the sector level, it really was the type of day, a little mixed day on trading, but we were really seeing the strength in those defensive areas, notably utilities, real estate, and the staples. A little bit of back and forth in most of the other sectors. And hey, Jazari, good to see you, buddy. Always a pleasure and great to have you with us. Hope the market is treating you nice. It's a mellow day. It feels like a calm before the storm type of thing. We'll see. Ryan said it best. It does feel like a Friday. Still hanging out on that trend line, still dancing around that $56 zone on the material sector. Again, we looked at this yesterday. It's still mixed. We still have things, at least I personally believe that, things like air products on a breakout above that resistance is still a very legitimate breakout candidate to the upside. If that were to happen, I don't know what I do, but I know I would be interested. But we've got lots of Dows too, right? We've got a lot of things that have broken support. We've got FCX, another big break of a major support level here today. Still, I think we have to be a little skewed to the bearish side in the material sector. I think there's more bearish looking charts than bullish ones, but not exclusively, and especially at this trend line. This is an important battle, in my opinion, as many of you guys know, that this is such an important, if this thing gives out, I expect 54, realistically, I can't see anything stopping the ETF until 54 if this support zone / all this history in that 56 range does hold out. Now, maybe it would take a bearish retracement on some of those beaten up material stocks. Maybe it would take a breakout on some of the ones that have held up relatively nicely. But I think we have to be a little careful here. Either way, open to both sides, skewed a little bit to the bearish side still in materials. A little bit back and forth day. Energy continues to be, like many of you and many, if not all of the other coaches, tackle trading the most bearish of the sectors. I mean, it's we've looked at it a lot lately, right? And breaking down, threatening to break down, big down days, really no signs of life. Now, we did have a little bit of a doji. We are a little bit of extended to the downside after forming resistance, breaking support. Wouldn't be terribly surprising if we were to see a little bit of a bearish retracement develop or a consolidation period. Support-wise, though, we still have nothing till 54, at least in my opinion, other than today's low, which maybe will be a support level and maybe it will be an intraday support level. We'll see some upward movement, but I wouldn't expect that to be a bullish signal by any stretch of the imagination. So probably, it's still breakdowns. I'm kind of mentally preparing for bearish retracements in energy with how extended it is to the downside. I'm not hoping for that because, as many of you guys know, I've been pretty skewed to the bearish side in energy. So I'm not hoping for that, but I am kind of mentally preparing for that. Over in financials, still doing this, hanging out at that 26 marker. That's an important battle. We've seen a lot of history, and a lot of that, of course, is to do with the banks, as we've talked about a lot. But it is really worth mentioning. They're doing the same thing. JP Morgan hanging at support. Breaking that, I would expect more downward movement. If people bought off of it, well, I wouldn't be that person. I would get it. So we're forming a little bit of support on some of these different banks. Same thing with Bank of America. So we're really seeing it in a lot of the different banks, much like the ETF overall, hanging at that support level. This ETF is, of course, pretty heavily weighted at the top to the big banks. So, that they have the most influence on what the chart ultimately looks like. Still okay, with things outside of the banking. I do think, as you guys know, I've said many times, I think we have to be careful when it comes to the banks right now, at least for the short term. We'll get some interesting opportunities for them not too far down the road, I would imagine. But until then, I think it's kind of the same old. We can be open to some ideas, in some of the insurance or in some of the brokers. Maybe not the best looking chart for tomorrow on Allstate there, but some nice movement here on CME. I still feel comfortable from a bullish point of view, if things line up right, of course, in those areas. Banks and regional banks, certainly the areas that are concerning me the most from a bullish point of view, at least over in the financial sector. Not a lot different over there. Still hanging around on industrials. We did break through that little support zone, did come off of the lows and kind of fake out intraday traders, it looks like, on the ETF. Again, this is just an area that, if it's not defense, I am not interested from a bullish perspective. We looked at level 3 yesterday. Pretty decent movement here today, coming off of yesterday's doji. Same type of thing. I think this was a better looking chart, but that's kind of eye of the beholder stuff. Holding up on Northrop Grumman. Maybe we can put a little bit of a little sideways action and then break to the upside in a day or two. Lockheed Martin. So it was really, bouncing back. The strength really does, to me, still feel like, from the strength perspective, it is over in the defense sector. On the other side of things, you've got things like FedEx here, just hanging by a thread at support, right? Testing a longer term support level. Probably have to go to a weekly chart to actually see this the right way. Testing a support level, tried to rally, post earnings, but here we are today. Big old potential. I don't think you could say it's broken just yet, but I do say it looks like a bearish cup and handle, or a reverse cup and handle on this weekly time frame. So things not looking all that great over in FedEx. Probably be on my radar going into next week. Of course, GE, whistleblower comes out. Biggest fraud since Enron is the phrase that I was reading on all of the headlines. Huge gap down. That's a big company. That's a big story. I don't know that you do anything with this, but I do know somewhere out there, Coach T is doing a little dance, and he's probably mad because he probably wasn't shorted. So you can't blame yourself for that, T, if you didn't. That's kind of out of nowhere news, but that probably does. I don't know about you guys, but I probably won't touch it one way or another, but certainly from a buying perspective, that is scary stuff in my mind, at least until it kind of shakes out. We are seeing an interesting potential pullback, kind of flipping, going from the FedEx over into UPS. Actually pulled back, had a pop, pulled back, is currently holding support. Probably have to break back above 118 for me, at least as it's currently constituted. But if it kind of pinches in here a little bit longer, and you'll have to forgive me because I'm going to dry this live, and you know that that's not my cup of tea. If we could take out the trend line, from aggressive point of view, maybe you could talk. So I don't know. We'll kind of see. Cat, of course, one of the big names, is approaching a pretty significant support level of its own in that 115 range. Honeywell, one of the defense companies, that's really not holding up nearly as well, breaking down. I don't know, this one I'm kind of glad we looked at it. Have to think about that 200, but already broke down, kind of dancing on the same intraday level of support 3 times. No real support till the 200-day moving average. I don't know, might have to take a closer look over there. And of course, 3M, can't get out of here without talking 3M, broken down here today, well, I guess it broke down yesterday in a breakdown. So pretty mixed, I think mixed to, skewed still to the bearish side, I think, over in the industrials, like many of the aggressive sectors. But some interesting charts are developing out there. I would expect, last week I had like 1 or 2 in my watch list going into the week. This week, I expect I'll find a few more interesting candidates. So over in tech, again, just going to look very much like the NASDAQ. I think our clear signal has got to be, breaking resistance or breaking support. Right now, we've moved down off of resistance. We are testing a support zone. Depending on our bias, I can hang my hat on 76 and say it's going to hold as a buyer, or I could hang my hat on, just shy of 80 as a bear and say that's going to hold. We're really kind of in the middle right now. The one thing I am seeing, if we do give out support, pretty clear fall on the ETF until that 72, let's call it 72.50 at around that 200-day moving average. We do have some history in that ballpark as well. Pretty important support level. I think a break either way could be a pretty good signal for us. I agree, Ryan. Yeah, a lot of interesting things in the industrials right now. I think tech could be that case too. Certainly to the breakdown side. I know we looked at them yesterday, but I do think they're worth keeping an eye on until we get some clarity from a technical perspective, one way or the other. Over on CERN here, Cerner Corp. They're kind of tech, healthcare tech. I think they're in the tech, according to the GICs, if I'm not mistaken, still in a breakdown candidate, potential reverse and head and shoulders, particularly if we're seeing the tech sector and the NASDAQ continue to break out, things that are kind of hanging around some support zones, probably going to stand out a little bit. Probably not going to find a ton of bearish retracements tomorrow, at least as the market's looking today. I think we do need to be cautious while we're in this range. I think we can trade bullish if we see some upward movement, on individual components that deserve it. I guess that they're passing their test individually. But broadly speaking, I think for me at least, I'm going to be fairly neutral on tech until we come out of either 76 or 80. Trading in between either way would make a lot of sense in the shorter term. Over in staples, one of our biggest movers today, up 1.5% on the ETF, right back into that resistance. Again, this isn't, hey, Adib, good to see you, buddy. Always a pleasure. You know where I am on this. I've continued to, these are the areas that I am most comfortable with. These defensive areas, I'm a wimp. Everyone knows it. If you don't, hi, my name is Frank, and I am definitely a wimp when it comes to just about anything trading related. We do have some resistance, as you can see. A break beyond that resistance, pretty nice signal, especially as we're currently set up where we've established higher lows. And we've got a pretty clear ceiling. If we hold this low from a couple of days ago, then even if we're back and forth in here, a break to the upside, probably a pretty strong signal to my eyes, at least. So a little bit of resistance on the ETF right now. Like to see that break through. Still maintain, I'm bullish on XLP, on the staple sector as a whole. Conservatively, yes, absolutely, because of the conditions that we're in the market. But one of the few areas that I do feel fairly comfortable. Another area that I do feel comfortable, and boy, we are knocking on the door. Good bounce back day for utilities. Still battling that resistance zone at $61, but I mean we've watched this together for months now. All summer long, we've looked at 61 be the end, right? And so again, it hasn't. We technically did close above 61, but I don't think you can say that we broke out today. But I do think what you can say is we are seeing many stocks breaking to the upside. Just a couple that are kind of on my personal radar. On the pullback side, Southern kind of pulling back a couple of days, kind of hitting their pullback, breaking over that resistance might help a pullback, whether it's on Southern or whoever it might be within that sector. Over on, whoops, ticker symbol there. Over on, I think these guys were stock report this week. I guess it helps if I do the right one. Nice little triple top breakout candidate over in XEL, breaking out with the market or with the sector would be interesting too. It hasn't happened yet, at least in my opinion, but it's knocking on the door. It's been trying. That's a good signal in my eyes. If it does happen, we're close enough that if we're interested, and maybe we are, maybe we aren't, but if we are, think maybe it's not a bad time to kind of shop around a little bit, see if there's anything out there catching your eye on the utility sector in the event that we do break to the upside. And you do see it like I do, of course, as another bullish signal. Over in healthcare, blah type of a day, not a lot to see here. This is an area much like the broader market. It's skewed to the bearish side. I think we have to be careful. Another day, and it really stands out after a while. Many of you guys know that follow tackle trading on Twitter. At the end of every day, I kind of put out who hits new highs or 52-week highs, new lows, and it's just been day in and day out for poor Pfizer, all for several weeks now. Just another we get a little bit of relief candle, I guess, but another 52-week low. Not the greatest look in the world. Let's see. Oops, J&J is who we wanted to take a peek there at. Still an interesting one. Still a potential K-trade candidate. In my opinion, got a pretty good idea of where support is. Pretty good idea of where resistance is. So there are some things worth keeping an eye out in healthcare. But as a whole, we don't really have a lot of support until we get to these lows. And so selling in the market, I would expect the healthcare sector to maybe very, very short term, if it were to say happen tomorrow, be in a position where it could sell a little bit heavier than some other areas, simply because we have support, on XLK. We have support on many, on XLF. We have really, other than today's low, we really don't have any support until we get into that 88.25, 88.30 range. So nothing really to prop it up. Some upward movement, maybe we could talk. Humana is still an interesting one for me. This is kind of more going forward, but I do think this is probably several weeks away, if ever. But we do have quite a bit of resistance after kind of a nice little reversal here. Pretty ugly pullback. I don't think I could be sold on that. But this 310 range is a pretty interesting price point. I think worth keeping an eye on. That's probably, if at all, at least in the relatively shorter term time frame, we've got some work to do. But I think it's prettier when you look at it on a weekly chart. And maybe that's just how I look at it. If we do take that out, there's just really not a lot of resistance. And so it might not even be a buy above 310. It's, more probably, while there's a lot of room, that probably means the sector, or at least the market, is performing, less bearish. And quite a bit of empty space between 310 and 340, that maybe there's some things that we can look for some opportunities. So that's thinking a little bit further down the road. That's probably not something any of us have to worry about tomorrow. And over in the discretionary, testing the support level, we've got a pretty good level of support in this, in this 114 range. I'll just kind of steal that a little bit, but not much beyond it. I know Coach, I caught a little bit of the halftime report today, was kind of talking, if the support breaks down, there really just isn't much for, until we get back into this 110 range. And I absolutely would agree. I forget their ticker symbol. The retail REIT is XRT. I forget their ticker symbol. Look at this guy here. This is going to be more of the brick and mortar type real, stores, Macy's and Urban Outfitters and things of that nature. But testing a very long term, looking here at the weekly chart, major level of support. Big bounce, big bounce, big bounce. Hold. We held here today. A break below that thing. Ooh, that's kind of ugly from a technical point of view. What's there to catch us anytime soon? I don't really know the answer to that question. The retail is, so often these days kind of struggling anyway, right? And within a bearish market, it can be one of those areas that are definitely hit up. Definitely worth keeping an eye on. Maybe it's not XRT, but retail overall. XRT, of course, is an option as far as a vehicle, but so are the many different stocks within that area that are breaking to the downside. On the other side of it, Starbucks, which, by the way, you will find a little video over on the Tackle Trading Instagram going over Starbucks here. If you hop over there some point in the not too distant future, I definitely encourage you to do so. Coach T, quick little look at the Starbucks from a technical, little bit of a fundamental perspective as well. So if you haven't had a chance to get over to the Tackle Instagram to check out Starbucks, the stock of the week, I'd definitely take a peek at it. We're still holding support. I'm just going to steal this. We're really putting together that nice little top, right? We're holding up pretty nicely in pretty rough conditions. Very clear top is forming. Not a lot beyond that until our recent swing high. Obviously, the overall trend has been very, very strong. Really interested to see if we break to the upside. That's certainly on my radar. If I'm not already around from that more recent pullback. But for the most part, we've got things like Amazon. We haven't taken a peek at Amazon, of course, a big part of this ETF, hanging out at its 200. We've got a support level here. Again, we can't say it hasn't happened yet, right? But if this support does break, space. And that's really the kind of theme where we're seeing a lot of things, at least how I'm looking at the market. We are some pretty important support levels. And if these support levels give out, there's room before we get into other easily identifiable, at least that what I would consider easily identifiable support levels. Amazon lining pretty nicely up with that. Hasn't broke support yet, still hanging around that 200-day moving average, but not a lot in between there. An area that I think we have to be skewed to the bearish side, still open to the bullish side, of course, but skewed once again on most of these aggressive areas to the bearish side. A little bounce back day over in the REIT, still knocking on the door of that breakout. Many of there's only like 8 or something companies in the S&P that hit new highs or new 52-week highs today. A lot of them were REITs and utilities, as you can imagine. PSA still, holding up nicely, continuing to run after that recent breakout. VRT. There's a lot of interesting REITs out there. I thought it was Veritas. Maybe it's VTR. I don't follow them. They were one of the few stocks. There we go. Yeah, they broke out of a little bit of a top here today. Quite a bit of strength in the REITs, at least in my opinion. You guys know that. Still believe that, it's still good, and many of these things have already broken out. Good signal, of course. That next signal is going to be a break to the upside. Really anything above, this support level, I'm still interested as a bull. It's just maybe not specifically today. A break of that resistance would be a really nice signal. Certainly feel comfortable with the REITs. Personally, will like that, and utilities. A break of those resistance, very nice technical signal on either or both of them if they would like to break to the upside. Defensive areas that have been relatively holding up within the current market conditions to boot. And over in XLC, much like the market, just a day off, kind of back and forth. Facebook trying to hold its support level, a lot like Amazon. Maybe it does. Maybe that support level tempts some buyers. It wouldn't tempt me. We're making lower highs and lower lows, so it wouldn't tempt me. But if the support does give out, 170 seems like the next level of support on something like Facebook. A little bit of old resistance. We do have a little bit of a pivot point closer to 160. Got the 200-day moving average just shy of 170. Yeah, that's a little scary if that gives out in my mind. On the other side, though, I do think we have to respect what we've seen in Google as of late. And this is probably a next week watch list candidate for me. If we do see some upward movement and can hold this trend, I think we have to take out this resistance personally, but that could be an interesting signal. That's probably not something I have to worry about here tomorrow by any stretch of the imagination. You had AT&T breakout, still holding its breakout at this point after quite a bit of selling yesterday. Trying to hold that breakout, I guess hasn't hit the stop loss yet, is what I meant to say there. Knocking on the door of that stop zone, but holding up here today pretty nicely. You guys know me and my history with EA. I tend to be grumpy about it, but you got to call it like you see it. I probably won't trade it because they never do, but you got to call it what it is. That's an interesting little breakdown candidate. I think at a support level, if this ticker symbol is something different, maybe I'm a little bit more interested. I don't know. You guys know me and my general dislike of doing anything with the EA. Don't have a great record with them. So that's where we find ourselves. A couple of interesting things that I kind of ran into throughout the day. A little bit of a bearish retracement kind of forming on LH here, breaking down, a little bit of downward movement. Probably need to see a little bit more. But if there's not a lot of bearish retracements out there, so I was kind of surprised to find any, quite honestly. We looked at LHX already. If you guys have anything you want to take a look at, feel free to throw it in the chat. We'll take a quick peek as well. Match, we looked at Match, saw some pretty nice movement. Looked at Match, that little doji yesterday. Nice little upward movement here today, confirming a little bit for the traders willing to trade bullish into this market. Take Two. There you go, Ryan. The other video game company. So very good call on your part. Whereas EA definitely is knocking on the door of breaking more support. Take Two here. Nice, pretty organized retracement during a fairly rocky time frame. Absolutely got to like what you're seeing here, Ryan. A little bit of a floor kind of putting in on this daily or on this hourly chart as well. Still think for me, it hasn't confirmed yet. Yeah, I do too. I don't do anything with them anymore. It seems like, I don't know what it is. Maybe it's because I say mean things about their video games. I don't know. I gave up a while back on them, Ryan. But Take Two, they've never done me dirty like that. So you can actually kind of see on Take Two, it's kind of an interesting chart. We've really flatlined over the last day and a half, putting together a little bit of floor, have yet to even break intraday resistance. I do think we've got to see a little bit of upward movement in the form of aggressively kind of maybe breaking out of these tops. Maybe have to scrunch down into a 15-minute time frame to kind of get where that would be. That probably put us 127. For me, from an aggressive perspective, I'm not probably looking to be too aggressive in this market, so probably need a confirmation candle. But yeah, I think that absolutely is a very nice looking. Thanks for bringing it up, Ryan. That is a good looking chart, in my opinion. Let's see here. Let's just Take Two. Jules over on Twitter last night was just having a hard time getting the risk to reward tool working. We have, of course, this on TradingView. We of course have this over on our scouting reports, so you can kind of put those together. So Jules, I know you're probably catching it a little bit later. If doesn't look like you were able to make it live, but no problem here. So basically, we're going to go in. You're going to hit this one right here. It's going to be. I'll just get out of there, and this will be right over on Tackle Trading, on the scouting reports too, so you don't have to jump over into TradingView. So let me get rid of that because drawing live is never my strong suit. So it's just going to be your measurement and prediction tools. Just hit the little arrow next to that, long or short, depending on how you're wanting to go. We'll go long here and build this out here on Take Two. We'll say we want to get in above today's high. We're not going to be too specific, just kind of want to show you how to do it. So when you first bring it up, you're just going to put the, just click it on wherever your entry would be, basically. And then we can move that a little bit. I need to drag it up a little bit or whatever. Just going to have to click on the, just click on it. It'll turn these little circly things on for you. Same thing on the downside. So maybe Ryan and I are like, yeah, you know what? We might set up a swing play on these guys. I'd want my stop loss below today's low. And that's where I'd want to go. I'm going to scrunch this down a little bit. Same thing, we can kind of do our target. Hey, my first target in an upward trending stock like Take Two, if I were to take a trade, my first target is going to be this swing high up here, at 131.50 approximately. So that's where I'm going to be. If you might need to just left click, Jules, and kind of zip zap. That's how you kind of move back and forth on the TradingView charts. So if you just click on the actual, on the little graphy thing that you see here, that'll bring out your your risk to reward, where your stop is, where your target is, all of that fun stuff. Very easy to kind of customize. If we wanted to, well, I'd like to try to get 1-to-1 risk to reward ratio and be a big wimp, well, that's where I would need to go, right? Or whatever the case might be. Or maybe I want to zoom in on a shorter term time frame. Probably a terrible example on Take Two, because after looking at that hourly chart, not much we can do there to tighten that stop loss up. But that's how we can use that, Jules. Hopefully that does give you some ideas as you're kind of using it going forward. It probably is not going to save over on the scouting reports, because you're not logged in, so to speak, into TradingView, the charting platform there. But you can, of course, always add to it. Same thing if we're on the short side. just click your short. I want to go short if it goes below this price point. My stop loss would be wherever it would be, and my target, obviously this is not a trade for tomorrow, at least on take two. So fairly simple and straightforward once you kind of know where to go. So again, just pop into the little measurement tool here. It's 2 below the T. That's how I remember it. It's 2 below the T. And just hit the little thing, and then it'll take you where you want to go. So hopefully that helps, Jules. If you have any questions, you can of course hit me up here tomorrow, or hit me up on Twitter. Be happy to go through anything else that you need to over there. Kind of shifting gears over into the world of commodities. Fairly dull day in the metals. Not a lot to see here from a daily perspective, drifting up a little bit, over in gold. But boring day in the market, boring day in gold. We're kind of looking at this hourly chart kind of knocking on the door of a breakout with not a lot of resistance till that recent swing high. You guys know me and gold. As long as it makes sense within our technical rules and our systems, I maintain a bullish outlook. And while it may not always be the thing that I would do, never going to argue with somebody trading into gold from a bullish point of view right now. Over on silver, similar, but I do think we got a little bit of overhead that we kind of have to want to worry a little bit about, with kind of drifting up into that. But again, still very bullish in the metals market, just kind of a little bit of a day off. Over in natural gas, we really had a pop here today. We've been kind of watching this since last week, right? With a little bit of, I've been just watching it and not doing a thing about it, because I'm not trusting this low $2 range as enough to be a buyer, but I guess maybe I should have, at least off of today's price action. Really nice pop. We've seen it over the last week. Buyers starting to trickle in, and the bears just have kind of disappeared, and I know they haven't really disappeared, but really it just slow drift to the upside. Now we're above the 9 EMA, we're above the 20 SMA, knocking on the door of the 50. We've got major resistance, as everybody here knows, at 250. So that's currently the biggest thing right now. I think you look at this on a weekly perspective, and I will give it this: it did break the 9 weekly, at least as of Thursday, right? One more day before it's official, but that tends to be a little bit of a short-term bullish signal. It's got more work to do, but we can see buyers coming in off of it. I don't think, if I'm looking at it from a bearish point of view, now is not the time. I might get a really nice bearish retracement opportunity on this in the days to come. And that's kind of where I'm leaning if I had to do anything with it, but not tomorrow. Need to see how it responds. If we can push through the 50-day moving average, it wouldn't be the world's biggest surprise to work back into that 250 zone. I think that's a big test. We saw that break. We've seen that play over and over and over again. Really nice pop over in that in the natty gas today. Not a lot to do, there in my mind. I guess if you're, boomeranging it, you probably already have your plan in place, whether you're in or exactly what you're looking for your signal. I get that, but I'm not there yet. I do understand that philosophy, though, and I know a few traders are doing that. And lastly, over in crude, kind of in that little triangle yesterday, kind of breaking through it here today, actually setting up pretty nicely. If we look at this on an hourly time frame, we've actually established, if we're looking for sell signals at least, we've got a pretty good floor, just shy of $54 after breaking trend. Right now we've created a lower high, right? So we've got a lower high, still waiting on that lower low. Of course, that's what the break of that, just shy of $54 would be, to me at least. So on the downside, below 54, probably the signal. Whether it's a tradable signal or not, that's of course up to me and up to you, but I would interpret it as a bearish signal if we were to break out of 54. On the other side of things, while I wouldn't trust it, I think you could at least make a case that if we take out that 55, we'll call it 55.50, just the swing high, this old little breakout point here, I think you could call that a little bit of a bullish signal. I wouldn't fight it. I wouldn't want to go short if it were to break that, for whatever that is worth. In that scenario, what we've probably done is we're getting a million lines on crude because it's gone kind of bonkers lately, right? But in that scenario, what we probably have done is formed this pattern right here, where we pulled back, support holds, resistance keeps getting lower. Sooner or later, we pop one way or the other. Right, that's kind of the whole thought process behind these type of wedgie type of patterns. So I could see the argument for it, I guess, super aggressively. You could see an argument breaking above the trend line here right now. That'd probably be an intraday play, if anything, but not really a lot of resistance till we get to that 55.50. If you're a day trader, there's probably some interesting things that you've been doing and can be doing with crude in the days to come. If you're a swing trader and not interested in playing it from that point of view, I think you could make a case below 54 or, you know, wherever your number would be. You know, there's not much, right? In that 54 to 50, 51 range, there's just a lot of space. We've got a couple bounces, strong bounces in both cases, but not a lot in between. So if that zone does give out, no technical reason, at least, to assume that we're not maybe going to push back into those lows. I would expect if we do take out, you know, approximately 54, that's very much in play. So that's where I find myself on crude oil. I don't know about you, but it's still kind of a messy. It's a better day trader's place right now than a swing trader's place. Cash flow, different story altogether. No problem at all. One thing I do think it's happened kind of nicely is we kind of now know that, or at least I kind of now know that really for me, from a swing perspective, I need to take out this swing high from a few days back before I can really talk bullish. But if I do hold support and run back and I'm able to do that, that'd be a pretty decent little signal. Again, that's probably a ways away. Don't have to worry about that tomorrow. So ladies and gentlemen, that is going to do it for the market recap for today. But as always, thank you all so much for joining me. Always good times going through this stuff with you guys. It's certainly more fun talking through it with you guys than on my own. So thank you for joining me. Be sure to not only head over to the Tackle Instagram to check out the stock of the week, but also to vote on who you want us to go over. We've got TD Ameritrade, really running on this recent breakdown. We've got 3M, who just broke down yesterday, confirmed here today, at least per my trading rules. And we have Wayfair, another big breakdown candidate. So some ugly looking bearish breakdowns over there. Get over there, vote for your favorite, who you want us to go over. We will be doing that here very soon. So hop on over to the Tackle Instagram and, hey, if you got thoughts on Starbucks, let us know what they are too. And you're welcome, David. For our pro members, we, of course, have the Cash Flow Club tonight. So you guys are going to have good times over there with Coach Mark doing more covered calls, Tackle 25 covered call stuff, if I remember correctly. So if you're not a pro member, we always invite you, of course, to head on over to tackletrading.com, shoot us an email, team@tackletrading, tell Mark I sent you. We'll get you hooked up with a free trial so you can come hang around with us and see the other stuff that we do. And we're not hanging around on YouTube and Twitter being weird. So of course, we always invite you to join us over at Tackle Trading on Twitter. You can find me at FrankMartin23 on Twitter as well if you're ever looking for me. So thank you, Micah. I thought it was Mark's. Don't quote me on that, Jimbo. I thought it was Mark's, but I thought that because he said it in the halftime report. So if I'm wrong, it's Mark's fault because he said it first. So I thought it was, that's what Mark was saying in the halftime report. So I heard it through the grapevine. So if I'm wrong, it'll be fun either way. If I'm wrong, though, you can blame Mark for that one, Jimbo. So, all right, ladies and gentlemen. Well, thank you so much for your time as always. Again, check the futures tomorrow. Still, we know the market that we're in, right? Hard to imagine after one boring day that things have settled down. Maybe they have, but probably the most likely outcome is no. They probably haven't. So certainly be open. Trade what you see. Don't chase. You know the drill. I know you guys are doing those things. So get out of here, everybody. You guys have a fantastic Thursday afternoon. Enjoy the Cash Flow Club here tonight. I'll see you tomorrow for Friday. Yeah, it's a nice Friday. We'll talk some of the interesting things, at least I think, that are interesting that we're finding for trade setups for next week as well. So you're very welcome, Patricia. Thank you guys so much for your time. Thank you to all those who catch the recording a little later in the afternoon. Always appreciate you guys as well. So get out of here, guys. Have a fantastic rest of the day. I will see you tomorrow. Bye, everybody.